What's going on, everybody? Today's video we're going to look at what I use for my pre-market analysis. This will be a two-part video, so in this video we'll look strictly at the AM session, and then the PM session we'll cover next week in a separate video. So the most important thing, and the first thing that I look at, is the higher time frame bias. So if you go to your daily chart, you need to understand where this daily candle is expected to expand towards. So that can either be towards an imbalance, so a sibi or a bisi fair value gap, or towards a liquidity. So I use the daily and the 4-hour to basically understand where these higher time frame candles are likely to draw to. So it's important to have your higher time frame structure outlined before you drop into the lower time frames for your entry models. This is because there's more weight regarding the higher time frame liquidity points and imbalances. And if you use that in tandem with the lower time frame, you'll have a higher chance of succeeding with your lower time frame models. Now, after the daily and the 4-hour, I'll drop down to the 1-hour. Now for intraday price action, this is mostly what I'll be focusing on. So the first thing I'll be looking at is the order flow from the 1-hour chart. So you can see here we have, starting from September 21st down to the 27th, we have a pretty clear sell program going on. We have lower lows being made and lower highs being made as we reach down for this daily sell side liquidity. So this is your higher time frame target, and then your 1-hour order flow is pointing towards bearish movement. So then when you go into the lower time frames, you'll have both of those things in mind to possibly looking for shorts, or if you're going to scalp longs, you have to understand that you're counter bias from the higher time frame area. As well as order flow, you want to look at your market maker buy models and sell models. So here as well, you have a clear market maker buy model with your smart money reversal after we swept the daily sell side liquidity. So after you saw a market structure shift, you could use the original consolidation point as your drawn liquidity. So understanding your market maker frameworks is also important when you're looking at higher time frame. You could also use the 15-minute chart to understand your market maker models as well, because sometimes you'll see these models form on the 15-minute chart, and if you're using the 1-minute or 5-minute as your entry time frame, this is also a good confluence to have with that structure. Now getting into the lower time frame stuff. So the first thing I'll look at when I'm doing my pre-market analysis is where is the London swing high and swing low prior to the 9:30 opening. So there's a indicator up here that I use called the ICT Kill Zones and Pivots by TFO. This is extremely helpful. It'll mark out the session ranges, but you really don't need this indicator at all. But you have to look at the pre-market prior to 9:30. You look at your 2 a.m. to 5 a.m. highest point and lowest point, and that'll be your London open low and London open high. So you can see it's annotated here with the indicator, but you could also just manually go in with your pre-market analysis and mark this out with a array or horizontal line, whatever you prefer. And this is a great indication of where price will likely draw to after you sweep one out. So you can see it did take a while, but swept out the London high as well as a higher time frame buy side liquidity from the hourly chart. And then after we broke down, we did target the London session low. So your London session highs and lows is one of the most important things I think you can annotate. Obviously you want to go back and backtest this concept to make sure it fits your model, but I think if you were to mark these out every single day, you'll see that most times it does play out. Obviously there'll be exceptions to this rule, but it is good to have these annotated. Now, as well as London highs and lows, you can also look for your closest high and low near the 8:30 opening candle. So I'll show a couple examples. So you have your 8:30 candle right here. Preferably you want to look before that price point, or potentially before the 9:30 opening. So you can look at the most obvious highs and lows around the 8:30. This is the 15-minute chart, by the way. So you could use your sell side liquidity down here as well as the buy side prior to your 9:30 candle. And you can see a lot of times it does play out. A lot of times you have a sweep of the liquidity from your 8:30. So here's your 8:30. You can see the sell side down here as well as down here, and then you have an imbalance fill. Dug into it with the 9:30 equities open, and then we shot up towards the buy side from 8:30 as well as the buy side over here. And you can see it's also the New York PM high, and you can also see the London session high that's also ran out pre-market, but it is still good to have those annotated. Here's another example where you have your 8:30 candle here. Most obvious swing high and swing low before that would be your buy side liquidity up here. and your sell side liquidity down there. So you can see after we ran it out with the 945 candle roughly, traded back lower, and then we attacked the sell side liquidity all the way from 330 from the previous day. Now if you drop down to the 1 minute chart, another thing that I'll have annotated on my chart besides the 830 highs and lows and the London open high and low would be your RTH opening range gap. So if you switch your chart from electronic trading hours to regular trading hours, between the close of the previous day and the 9:30 opening on the current day, a lot of times you'll have a gap like this. Now if you take your fib, you can measure the closing price from the previous day up to the opening price, and you can take the high and low and drag that out, and then a lot of times you'll also measure consequent encroachment of this opening range gap, and you can use that as a target potentially for liquidity or for price to run towards. If it wants to fill sometimes half this gap and then continue in the preferred direction. And a lot of times you'll see this gap either left open for the AM session, or you will see a run down into 50% and then either a respect off of that level or a continuation to fully close the gap. So this is another thing you want to have outlined on your chart. It's also a good thing to know that this gap won't always form. Sometimes you'll have a clean opening just from the previous day close, so there won't be a huge gap to use, but this can also be kind of used as a new week or a new day kind of opening gap where you'll see respect off of the high and low and consequent encroachment. So when these do form, it's good to have them annotated on your chart as well as the liquidity, since I kind of see this as a liquidity void or a gap for the regular trading hours. Obviously you won't see it on electronic trading hours, you'll just see a large pre-market move sometimes, and that's also a good indication of low probability AM session if you have a large pre-market move. So anything over 120 points on NASDAQ and maybe anything over 40 points on ES, I would consider a large overnight move. So you have to be careful with the AM session, as it most likely will bring some chop until you see either a news driver at 10 a.m. or a proper displacement out of the consolidation range that was forming in the pre-market following the overnight move. Now, another thing you want to be very aware of would be the news drivers that you either have the current day or the next day, or even throughout the entire week. So if you have a large news driver like FOMC, CPI, or NFP, you want to be aware of those, as those can bring low probability days the closer you get to those days. So you can expect search and destroy kind of profiles where it's very, very low probability. You have chop and sometimes runs from buy side to sell side and continuing runs back and forth. So it's good to have either a checklist or just a common understanding of what days are expected to be low probability. I'll put a screenshot up on the chart right now, and it's just something that I use to identify if it'll be a low or high probability going to the AM session. So having things like this will save you capital and a lot of times save you from taking losing trades. So specifically when you have a news driver at 10 a.m., a lot of times you'll have a pre-market run towards liquidity. Now this is something that ICT said about last week or 2 weeks ago, where if you have a 10 a.m. news driver that's expected to bring some volatility into the market, a lot of times from 7 o'clock to 8:30, you'll have a pre-market run on liquidity. So you find whoever's been the most profitable, and sometimes you'll see a run towards that pool of liquidity prior to the equities open. So keep that in mind, because sometimes when you have a pre-market run on liquidity, then the AM session, the first 30 minutes or so, will bring some chop into the market. So if you have a model that forms around 9:30 or follows 9:30 shortly after, this screenshot right here should help you. So this is something that Elijah Pips shared with me. I'll put his channel link in the description below so you can go check him out. Now this is extremely helpful for using the 950 to 1010 macro or even the silver bullet. You'll have your 9:30 equities open. You can drag that price point out, and you'll have these 4 types of profiles that'll occur. Either you'll have a reversal near 10 a.m. or a continuation pattern with the 950 to 1010 macro. So if you understand where that equities open is, as well as where the hourly chart is likely to draw to, so that can be an imbalance that it wants to fill and then reverse, or it could be just a liquidity point that price is seeking towards. You can use this framework here as basically almost a cheat code for the 950 to 1010 macro. So if you use the higher time frame hourly chart as well as this profile, almost every single time you'll see it play out. So it'll either continue from the 9:30 equities open in a specific direction, or you'll see the 9:30 to 10 o'clock, the first 30 minutes reach up into a higher time frame liquidity pool or an imbalance, and then that 10 a.m. will reverse price and you can see a late entry with the macro. Now, if you're interested in more examples of this 930 market profile, you can either go back and watch the old 950 macro executions that I have, and almost 90 to 100% of the time, you'll see this kind of 930 equities open and then a reversal or a continuation. Or if you want, you can also DM me on Discord and I'll share some examples from previous backtesting. Last thing I go over for my pre-AM session analysis would just be my psychology reminders and my rules of engagement. So I think everyone should review the rules that they have in place so they're able to, take a win and a loss and not be emotional from it. It'll reduce your emotional side of your trading and hopefully be more analytical when it comes to taking trades and responding to either the win or loss that they provide. So I hope you learned something from this video. If you have any questions or concerns, you can put them in the comments below. I'll post the PM session analysis video next week sometime, so be on the lookout for that. So until then, stay safe and good luck and good trading.